Okay, so in our previous class, you didn't have any homework.
Yes, sir, but I have practiced the previous questions.
Okay. Do you have any doubt in those questions?
No, sir.
So we were studying Goodwill.
Yes.
Okay, so can you tell me what we have discussed actually? We have discussed the types of Goodwill.
Yes, sir.
We have discussed how many methods for valuation of Goodwill.
Yes.
Okay, can you tell me?
Goodwill are two types. One is made by the own organization, and other is bought by the organization. It can be like
No,
bought.
no. What is name of these types of Goodwill?
That I'm not able to remember that.
It is self-generated Goodwill and purchased Goodwill.
Okay, sir.
Okay. Do you remember that how many types of for valuation of Goodwill?
Yes, sir.
Yes.
Valuation. I think it is one is by the workers, employers, by they behaving good with the customers.
No. Valuation methods. You are saying the factors affecting Goodwill.
Evaluation is only possible with the purchased Goodwill, I think.
Actually, valuation methods. There are three types of valuation methods. These are the methods for valuation Goodwill.
Okay, sir. Average method. Yes.
Have we discussed this concept?
Yes, sir. Yes, sir, we did.
Okay. So first of all, the average method. Okay. So all these theory part is covered. Yes, already covered.
Yes, sir.
Definition, features, factors affecting value of Goodwill, types of Goodwill, and it is detailed. You can see here. You have asked a question in previous class for this purchased Goodwill. Yes.
Yes, sir.
When we pay the amount and actually how much the assets we have received.
Yes.
So this is our purchased Goodwill and self-generated Goodwill. Now, well, methods for valuation of Goodwill, it is average method, super profit method, and capitalization method. So what is average method? Actually, in this method, we use two types of average. There is first so the first is average profit. Now, what does it mean actually? Average profit method, there is two types. One is simple average and the second is weighted average. Okay.
Okay, sir.
So what is simple average and what is weighted average? For this, actually, you can see the concept here. The simple average means you have to calculate the average of profit given in the question. You know how to calculate average?
Yes, sir.
Okay. So in this case, first we have to calculate future maintainable profit. Now we will discuss this concept later. Just understand it is a type of profit we have. Future maintainable profit. Okay.
Okay, sir.
And after this, we calculate average profit. Okay. And how we calculate average profit? For this, we use formula average profit equals to total of profit. Total of profit, actually, sorry. You can see P1 plus P2 plus P3 and up to Pn divided by number of years. Now, what does it mean? P1 means profit for first year, P2 means profit for second year, P3 means profit for nth year, Pn means, okay?
Okay, sir.
Okay, so like this, P1 is for profit of first year, P2 profit of second year, and so on. Now we divide it by number of years. It is simple. We have already studied this. So average profit is calculated like this. So we will calculate future maintainable profit first, then we will calculate average profit. Okay. After this, we will multiply our average profit that we have calculated in step 2, average profit with number of year of purchase. Number of year of purchase. Okay. Now, what is number of year of purchase? We know that we can calculate average profit like this. And after that, we have to multiply the average profit with number of year purchase. Okay. So why we are multiplying with this number of year purchase, and what is this? Okay.
Okay, sir.
Can you tell me if you have any hint, any understanding of this line?
Maybe to divide the profit between the years.
Divide? No, actually we are multiplying it. So where the division, if you calculated 14,000, let's say average profit, okay, and
Okay, sir.
number of year of purchase is 3 years, so it is 42,000. There's no
Yes.
division in this.
Okay.
Okay. Okay. So now what is number of year purchase? So number of year of purchase is expected. We expect that our profit will be same for this much year without any additional effort.
Okay, sir.
Okay. So if we are doing business, okay, and we want to sell it, let's take example. We want to sell it. Now, the company which want to purchase our company will purchase all of our assets and liabilities. Yes.
Yes.
Okay. But as we discussed in our previous class, sometime a company pay us higher amount than our actual assets.
Yes.
And that difference is called goodwill.
Yes.
So now how we evaluate, how we do valuation of goodwill. Now, let's say we are earning 20,000 in a year, per year, you can say. Okay.
Okay, sir.
Actually, it is given for 1 year only. You can take this as average profit. Means if we have calculated average of 3 years, we get this 20,000 per year. Okay.
Okay, sir.
Now, we expect that this profit will continue in the hands of new company, okay, without any additional effort. You don't have to do anything extra. Okay, you will earn this profit if you continue to work as per the company's plan or company's doing whatever it is doing. We will do the same thing for next how many years so that our profit will be maintained. Okay.
Okay, sir.
Okay, so you don't have to do anything extra. Like I'm running a coaching institute in my small town. Okay, and it is an example. So I'm running a coaching institute in a small town, let's say, and I don't want to continue it. Okay, so I want to sell it. Okay.
Yes.
Now, I expect that if I don't do any advertisement, I don't do any promotion of my uh, coaching center, then also my coaching institute have 50 students in a year for next 3 years. Okay, after that, it will start decreasing. So I expect that 50 students will be maintained for 3 years without any additional effort.
Okay.
Okay. So now if I take 1,000 per month as a fee from these 50 students, then our monthly income, our coaching monthly income is 50,000. Yes.
Yes.
And the yearly income, annual income is 6 lakh.
Yes.
Okay. Now there is some expenses. Let's say we remove 2 lakh as expenses from this profit. So the balance is 4 lakh that we expect that our coaching institute will earn for 3 years without any additional.
Yes.
Okay. Now this 4 lakh for 3 years we can maintain. So 4 lakh in a year into 3, it will be 12 lakh. This is our value of goodwill.
So we are checking how much profit we'll get in another 3 years.
Yes, actually, we expect this profit to be maintained.
Okay, for the expectation.
Yes. So actually, expectation is based on some estimation, you can say, like what is our goodwill, how many students we have right now, okay, and how the future market will be. So with consideration of all these factors, okay, what we do, we expect that our profit of rupees 4 lakh will be maintained, because I told you that 50 students will be continuing in our business for 3 years. Yes.
Yes.
So this profit is from that students. Okay. And now if we can maintain this profit for 3 years, it is due to only our goodwill, because we are not doing anything extra. We are not giving any additional effort in our business. We are just doing what we generally do. Okay. I'm
Yes.
just teaching.
Yes.
So it means that this is our goodwill, due to which we can maintain our profit for 3 years.
Okay, sir.
Okay. So that's why this expectation for how many years is number of year of purchase.
Okay, sir. Got it.
Okay. Okay. Now this average profit, I told you that this 4 lakh that we expect, we will maintain this profit. Yes.
Yes.
So average profit multiplied by number of your purchase, you will get your goodwill.
Okay, sir.
Okay. So apart from paying for assets and liabilities, the company will pay 12 lakh for goodwill.
Okay, sir.
So this is how we calculate our goodwill in this is how we calculate our goodwill under simple average profit method. Okay.
Okay, sir.
Okay. So you want to copy this?
Yes, sir. 1 minute. So I can scroll down.
There's nothing else here.
Okay.
Okay. Now, what is number of year purchase? Number of year of purchase. So it is number of years up to which we can maintain our profit without any additional effort. Okay.
Okay, sir.
Now, do we have to calculate this? No. It is generally given in question.
Okay, sir.
So we don't have to calculate this. Now, I told you that we will discuss the future maintainable profit after discussing the average profit method. So this is our simple average. Actually, there is one more method, which is weighted average method. This procedure is same. There is nothing difference in the steps of simple average profit or weighted average profit. Just calculation of average will change. The method for calculation of average will change. Okay.
Okay, sir.
So what is our weighted average profit? Weighted average. So how we calculate weighted average? Under this method, average profit equals to P1 into W1 plus P2 into W2 and so on plus Pn into Wn. Actually, I'm writing N because there can be many years given in the quotient. So if it is 10, then it is 10. If it is 5, then you will take P5 into W5 up to that. Okay.
Okay, sir.
So W1 plus W2 plus W3 and plus Wn. Now, what does it mean by P1? P1, you understand, P means profit. Yes.
Yes.
And W means weight. Weight assigned by us. Okay. Or you can write weight assigned. Okay.
Okay, sir.
Now, weight will not be given in the quotient. You have to assign the weight. Okay. So you want to know that how we assign the weight?
Yes.
Okay. So let's say there is 3 years of profit given, 2018, 2019, 2020. The profit is 30,000, 60,000 and 1,20,000. Sorry. Yes, 1,20,000. Okay.
Okay, sir.
Now, in simple average, what we will do, we will add these three and divide it by 3. Yes.
Yes.
Okay. But in weighted average, we will assign a weight in ascending order, starting from 1. Okay.
Okay, sir.
So first year will be assigned weight as 1, second year as 2, third year is 3. So the latest year will get maximum weight because it is in ascending order.
Yes.
Okay, so 2020 is getting 3. Now we have assigned the weight, so we will calculate average. It will be 30,000 profit of year 1 into weight of year 1. So into 1 plus profit of year 2 into weight of year 2. 60,000 into 2 and plus 1,20,000 into 3. Yes.
Yes, sir.
P1 into W1, P2 into W2, and Pn into W1. Yes.
Yes.
Okay. Now it will be divided by their weight, total of their weight. So W1, W2, W3, it is added. So 1 plus 2 plus 3. Total is 30,000 plus 1,20,000 plus 3 lakh just 3,60,000 divided by 6. So 360, 120, 480, 5,10,000 divided by 6. It will be 8, 5, 85,000. Okay.
Okay, sir.
So this is how we calculate weighted average, and all the other steps are same. First, we will calculate future maintainable profit. Then we will calculate average profit either by simple profit method or weighted average profit method. And in third step, we will multiply the average profit calculated with number of your purchase. Okay, it is our goodwill. So goodwill equals to average profit into number of year of purchase. Okay. Now tell me, do you have any doubt?
No, sir. So, sir, this average profit is for that future maintenance.
Yes, average profit will be calculated after calculating future maintainable profit.
Okay, sir.
First, we will calculate from the profit given in the quotient, we will calculate future maintainable profit, that is FMP. And then with the help of that profit, this P1, P2 is future maintainable profit.
Okay. So, sir, we did that FMP part.
No, not yet.
Okay, sir.
Okay.
Yes, sir.
So
Completed.
complete. Good. Now we will discuss the future maintainable profit. Okay. First of all, why we need to calculate future maintainable profit? What is this section? Future maintainable profit means the profit which can be maintained in future. The name Tell us. Yes.
Yes.
The profit which can be maintained in future. There is no extraordinary profit or abnormal profit. We don't have to include all these type of profits in our actual profit. Okay, for calculation of goodwill.
Okay, sir.
Okay, because let us take an example of extraordinary profit, like yes, we are earning 20,000 per month as a salary. Okay.
Okay, sir.
Not we are, actually I am earning, just assume. So I am earning 20,000 per month, and it is my salary. So I expect that it will increase by 5% or 10%, or it will be same. Okay. So for understanding purpose, I'm taking that our profit will be same. Sorry, our salary will be same.
Okay, sir.
Okay. So my salary is 20,000 per month. So for a year, it will be
20,000 per month.
yes.
It will
So
be
for a
20.
year,
2,40,000 it will be.
2,40,000. Yes. Now, I expect that this profit will be maintained because it is my salary. Okay. And if
Yes.
I'm working, then it will be uh, our my earning. Sorry. So
Yes.
it will be my earning in future also.
Yes.
Now, let's say that I had a bike. Okay. And I sold it at 80,000. Okay.
Okay.
Okay. Just 1 minute. Sorry, actually, there was a call. Okay. So future maintainable profit which can be maintained in future. So we only take uh, the profit which can be maintained, not any abnormal profit or extraordinary profit. So I told you that I had a bike, the price of which is 30,000. I have purchased it for 30,000. Okay. And
Okay, sir.
I sold it for 80,000. Let's assume, actually, generally this does not happen, but let's assume that I have purchased a bike at 30,000 and sold it at 80,000. Okay.
Okay.
Now, apart from my salary, how much I have earned as my income?
80,000.
80,000? No, actually, the profit is only 50,000. 30,000 is my expenses also.
Okay.
30,000 is the cost of bike that I have purchased, and I sold it for 80,000. So the profit is 50,000. That is my income.
Yes. 50,000.
Okay. And including salary, my total income is 2,90,000. Yes.
Yes.
Okay. Now, if I want to know that how much profit can be maintained in future, how much profit can be maintained in future, then
You have to multiply 2,40,000 into the years.
why I can take 2,90,000 or not?
No, you can't take 2,90,000
Why?
because the bike can't be sold every year.
Yes, very good. Bike cannot be sold every year. So it means the future maintainable profit will include only the salary of my, yes?
Yes.
Okay. Now, so this kind of profit is excluded. So you will be given information about this type of information, like abnormal profit, abnormal loss, extraordinary income, or any future income or loss also. Now, let's take assumption now, only one more assumption. My salary is 2,20,000 per month, okay?
2,20,000.
No, 20,000 per month,
Okay, 20,000.
okay? And it is expected to increase by 10% in next year.
Okay.
So future maintainable profit,
It is not, I think.
how much future maintainable profit I have to take?
20,000 only.
Only 20,000?
Yes.
Actually, we will take 22,000 because 10% increased salary is expected to realize from next year. If it increased to 22,000, it will be maintained in future also. It will not decrease from 22,000, yes or
Okay.
no?
Yes.
So it is future maintainable profit. It will be maintained in future.
Okay, sir.
Okay.
If it is says that every year it increases, so we can't take that.
We can take this as future maintainable profit.
Yes, because it's increasing only for 1 year. But if they say if it is increasing for every year, then we can't.
I don't understand your question. Actually, can you
Like
repeat?
10% next year, and after that
Yes.
again 10% they will increase. So that time we can take or not.
Yes, we can take that.
Okay.
Okay. So
Okay.
for actually, we take the increased profit if it is certain. Okay.
Okay.
So generally, percentage will not be given in your quotient. It will be given in amount form.
Okay.
I have taken this example only for understanding purpose, but you will be given only the pure value, no percentage.
Okay, sir.
Okay, just okay. So now, in the same manner, company also let us take this year 1, year 2, and year 3. So what is the net profit? It will be given in the quotient. So you will take net profit like this. And if, let's say, there is an abnormal profit, okay?
Okay, sir.
Abnormal profit by sale of old car of 50,000. So how we will eliminate from our profit? How will
We will minus
eliminate?
it
We will minus it. Okay. Why? Can you tell me?
because next year you won't do that sale.
It is included in our profit actually. So to eliminate this, we have to deduct it. So first it is added in our profit. So if we deduct, the profit will be eliminated. Yes.
Yes.
So abnormal profit will be deducted. Same abnormal loss will be added, like loss by
Sir.
fire, loss by accident. It will not happen again.
Yes.
Okay. So abnormal loss is already deducted from this profit. So we have to add that. Okay.
Okay, sir. Got it.
Okay. So abnormal loss, we will add any future income, future expected income. It will be also added. Now, after adding all these, we have to deduct future expected expenses or future expenses, you can say. Like company hire a new employee. Okay. So in that case, we have to pay extra salary. Okay. So this is our future expenses. In the past, it is not, but in future, it will happen.
Okay, sir.
Okay, so that's why we have to deduct any future expenses or we have to add any future income. So this is your future maintainable.
Okay.
Understood?
Okay, sir.
Okay. Now let's see a question of this. You want to copy this? Please take the
Yes.
screenshot.
Yes, sir. Done.
So okay, I'm sharing the question with you now. Just one minute. Okay, so can you see the question
No, sir.
now?
Yes.
Okay. So the first question is very simple one. Goodwill is to be valued at 3 years purchase of 4 years average profit. Okay.
Okay, sir.
And profit for last 4 years ending on 31st March of the firm were given. Okay, so it is 12,000, 18,000, 16,000, and 14,000. So if we solve this question, it is actually very easy one. So first of all, there is no additional information about any abnormal profit or losses given in the question. Yes.
Yes, sir.
So these profits are also can be called future maintainable profit. So we will calculate average profit. Average profit equals to 12,000 plus 18,000 plus 16,000 plus 14,000. So divided by 4. Now 30, 60,000 divided by 4. So average profit is 15,000. Okay.
Okay, sir.
Now goodwill equals to average profit into number of year of purchase. Yes.
Yes, sir.
Average profit is 15,000 and number of year of purchase is given in the question. It is 3 years purchase of 4 years average profit. Yes.
Yes.
So into 3, value of goodwill is 45,000. Is this clear?
Yes.
Okay. Now we will take a question of future maintainable profit. In question number 3, you can see here. Or question number 4. Okay, first 3. A and B are partners sharing profit in the ratio of 3:2. They decided to admit C as a partner from 1st April 2016 on the following terms. Actually, it is a concept of admission is given in the question, but we don't have to do anything for admission. We just have to calculate goodwill. So first information, that is their profit sharing ratio and they admitted C, is not relevant in the question.
Okay, sir.
Okay, so C will be given 2/5 share of profit and goodwill of the firm will be valued at 2 years purchase, 2 years purchase of 3 years normal average profit, that is future maintainable profit of the firm. Now, profit of the previous 3 years ended 31st March were 2016, profit 30,000 after debiting loss of stock by fire 40,000. 2015 loss 80,000 includes voluntary retirement compensation paid 1,10,000 and the last one profit 1,10,000 including a profit of 30,000 on sale of fixed assets.
Okay, sir.
Okay, so in this case we have to calculate future maintainable profit. Question number 3. First of all, working note number 1, future maintainable profit. future maintainable profit. Year 2014, 2015, and 2016 is given. Yes.
Yes.
And net profit of these year are to 30,000, loss 80,000, and profit 1,10,000. So in 2014, it is 1,10,000 profit. In 2015, it is 80,000 of loss actually, and in 2016, it is 30,000 profit. Okay.
Okay, sir.
Now, any abnormal loss will be added here. Abnormal loss. In 2016, it is a stock by 40,000, so it will be added. 40,000 will be added here. And in 2015, there is a loss of 1,10,000, actually compensation. 1,10,000 will be added. Okay.
Sir, the fire part I didn't understand.
Okay. What you don't understand here?
Means after debiting loss of stock by fire means?
Yes. Have you prepared profit and loss account in 11th actually?
Yes.
Yes. Now, in that profit and loss, there was an adjustment of loss by fire. Do you remember that?
Yes.
Okay. So if there is any loss happens due to loss by fire, accident, or any other theft like this, in that case, we write the loss, the total loss, or you can say net loss, is debited to profit and loss. Yes.
Yes.
And in calculation of net profit, this loss is deducted.
Okay, sir.
Okay, so that's why it is written here after debiting in profit and loss of the stock by fire 40,000. So 40,000 is already deducted from the profit, and after that deduction, our profit is 30,000.
Okay, sir, got it.
So it means we have to add this 40,000 because it is deducted and it is abnormal loss. Okay, so we will add this to calculate future maintainable profit.
Okay, sir.
Okay. So you understand the sale of fixed assets part, 2014?
Yes, sir, understood.
Okay. So there is this is abnormal profit. Abnormal profit of 30,000. So it will be deducted. Now, it is 80,000. It is 30,000. And it is 70,000. This is our future maintainable profit. Okay.
Okay, sir.
Now, after this average profit, we will calculate. Average profit equals to 80,000 plus 30,000 divided with 3. 80, 30, 110, 180, 1,80,000 divided by 3. 60,000. Okay.
Okay, sir.
Now goodwill equals to average profit into number of your purchase. Number of your purchase is 2 years here. 60,000 into, yes, will be valued at 2 years purchase of 3 years normal average profit. 60,000 into 2, it is 1,20,000. Is this clear?
Yes.
So this is our. Now, do you have any question about these topics?
No, sir.
Actually, you should have asked a question here.
Sir, where?
Yes, actually, I told you two methods for calculating average profit.
Yes.
Yes, and I'm just using simple average every time.
Yes.
Yes. So
Yes.
you should have asked that why we are not using weighted average profit.
I think because that is little long.
That is not written. Yes,
Yes.
but simple average is also not. Yes,
Yes.
you can see there is no simple average method written in the question.
Yes.
It is just average normal profit of past 3 years. Average normal profit means future maintainable profit. Same here, normal average profit.
So if it's not mentioned, we can use any method.
No, actually, this is the assumption. That's why I am using